All right, today we're going to break down the January 2026 Consumer Price Index for Tokyo. And trust me, this is a really crucial health check for the entire Japanese economy.
Hello and welcome to the Japanese Economic Review channel. We're the place that breaks down the data that's really shaping the economy. For months now, it feels like everyone's been feeling the pinch of rising prices. So, the big question on absolutely everyone's mind is this: are we finally seeing some relief? Well, let's dive into the official numbers and find out what they're telling us.
And here it is. The headline number for January is a 1.5% increase in prices compared to this time last year. Now, what's really significant about this figure
is that it represents a real slowdown. That's a noticeable drop from the pace we were seeing just a month ago.
So, how significant is this cooling trend really? Let's take a closer look at the figures.
As you can see, the change is pretty clear. In December, the year-on-year increase was sitting at 2%. Just 1 month later, in January, it dropped down to 1.5%. That half-a-point slowdown is a really significant move. But that's not the whole story.
To really understand what's happening, we've got to look beyond that one headline number and talk about something called core inflation.
Think of it this way. Fresh food prices can swing like crazy because of the weather, right? And energy prices can jump all over the place based on global markets. So what economists do is they remove these volatile items to get a better read on the underlying, more persistent price pressures in the economy, kind of like taking its true temperature, so to speak.
Okay, now this is where it gets really interesting. Just look at the contrast here. While that headline figure we saw is 1.5%, you get a totally different picture once you start peeling back the layers. When we take out just fresh food, the rate is actually higher at 2%. And then, when we exclude both fresh food and energy, what we call core inflation, the rate is even higher at 2.4%. So the crucial point here is that those underlying price pressures are still quite strong.
Okay, so let's move from the big picture to something we all feel directly: the prices at the checkout counter. What's actually getting more expensive, and where are we maybe seeing a little bit of relief?
The data shows some pretty steep increases. The price of coffee beans is up a staggering 66.6%, which is likely tied to global supply issues. Staple items like rice and chocolate, they're both up around 25%. And we're also seeing some big hikes in services, like mobile phone charges and hotel fees, which suggests consumer demand is still pretty strong. On the other hand, there has been some dramatic relief in other areas. Favorable weather has probably helped cause a 64% drop in cabbage prices. And a major outlier is childcare fees, down more than 60%, and that's possibly due to some new government support programs. Fresh produce overall has also become significantly cheaper.
So with prices shooting up in some areas and falling in others, what were the main drivers that caused the overall inflation rate to actually slow down?
Well, according to the report, 3 key factors were really at play. First, the price drop for gasoline got even larger. Second, the pace of price increases for food, even when we exclude those volatile fresh items, has started to slow. And third, the rise in accommodation fees, while it's still happening, has also lost some of its steam.
Let's just focus on that first point for a second. This chart, it's straight from the official report, shows the index for gasoline prices. That sharp downward trend you see right there had a major cooling effect on the overall inflation number this month.
So, after all that, what does this all mean for the bigger economic picture in Japan?
So here's the key takeaway. The headline inflation number is slowing down, and that's largely thanks to falling energy and some food prices. However, that core figure, the one that gives us a sense of the underlying trend, is still elevated at 2.4%. This suggests that those broad-based price pressures haven't gone away just yet.
And this creates a really complex puzzle for the Bank of Japan. Does the slowing headline rate mean they should hold off on raising interest rates? Or does that persistent core inflation mean they need to act soon to prevent these prices from getting entrenched? This is the critical question facing Japan's economy right now.
Thank you for watching the Japanese Economic Review. We look forward to having you with us again.